Welcome, everybody, to the 25th episode of the Oreninc podcast series. I'm joined again by Mickey Fulp, the Mercenary Geologist. And Mickey, thanks for making the time this morning.
Hey, thank you, Kai.
It's awesome. It's been a while. It's been almost, or now it's actually been 2 months because I have to admit I did make a blunder here. We recorded an interview roughly 5-6 days ago, and it just did not record. So apologize for that. And it's actually now pretty much 2 months now since we last recorded our last interview, and it's almost embarrassing. But it's been summer. Things have been slow. A lot of traveling in June for me. For me. I know you've been traveling as well, Mickey. You've been looking at a bunch of projects. You've been at the Yukon Sprott conference as well, and it's always a pleasure having you on the show. So thanks for your time.
Well, thank you, Kai.
As always, we've prepared just a little agenda, so to run you through a couple things we've been discussing beforehand, and as always, and as you've grown used to, I'll start off with the Oreninc index. I'll run us through some numbers we've seen here, and I'm going to talk about the unpublished numbers for this week, and they're going to come out in a couple hours here as well. I want to briefly talk about one interesting fact I've seen here on the warrant side. We're going to talk about some of the deals we've seen here in recent months. I think that's worth pointing out. Since it's the first recording in 2 months, we should still talk about that. And we're going to talk about base metals real quick as well, and the base metal prices, and round off things with our number of the week. So without further ado, I'm just going to quickly run over the Oreninc index and what we've seen, and it's been pretty much as expected. Seasonality has hit us really hard, and it's come really early for us as well. So the Oreninc index has been very low in the low 20s for the last 6-7 weeks, if I'm not mistaken. This week we're going to have an index score of 28, but only because we've seen a couple more deals this week happen, a total of 26. And one thing I'd like to point out with this week's numbers as well is that we've seen the average dollar amount per financing has dropped to $1.1 million again. So we're just barely scratching the $1 million mark, which I think is a big, or for me, an interesting sign as well, because a lot of the deals we've seen are actually now sub $1 million, dragging the overall average down by a lot. I mentioned it before, the index score has just been tumbling. We've had one massive spike just a couple weeks ago where we jumped to 54 points. That was due to one big financing. It was actually in the oil and gas space. It had nothing to do with the junior mining or exploration space, just oil and gas. It was a $52 million financing by Petroshale that was partially underwritten by some brokers out of Vancouver and Toronto, with a total size of $40 million for the underwritten part and $12 million as a PP. So that reason we saw a 54-point index in that week. It had nothing to do with the junior mining space at all, and if you take that deal out, we'd be in the measly low 20s again, maybe even high 10s. Yes, I think one thing we definitely should talk about, Mickey, here is the cash deals we've seen here. That's been almost like a new trend, or just some facts we've seen here. Orion and Dalradian and South at 32 in Arizona mining. But why don't you give us some more insight there, Mickey?
Well, about a month ago, we saw a couple of really big cash deals, and this is much different than what we saw in 2017, where they were all share deals and big M&As. South 32, the giant mining company, spun out of BHP 3 or 4 years ago. South 32, based in Perth, Australia, took out Arizona Mining at a 50% premium for $1.3 billion in cash. That was followed up a couple of days later. Orion Mining Finance hedge fund out in New York took out Dalradian for $400 million, and that was a 49% premium. And that was a cash and share deal. But both these projects have issues with them. They have risk. In the first instance, Arizona Mining has going to have a difficult row to hoe with permitting and environmental opposition in the Patagonia region of southeast Arizona. That said, it is a world-class base metal deposit, zinc, lead, silver. And then in the second instance, Dalradian, this is nuggety gold with continuity issues. It could be the next Brucejack. But that said, you got to be happy about cash deals. We have yet to see hostile takeovers that attracted a second bid. And I'm thinking specifically right now, Lundin Mining has gone all hostile on uh,
Nefson.
Nevsun. Thank you.
Yeah.
I was drawing a blank there. But we have yet to see anybody else pick up the ball on that. And for really healthy M&A activity, you always want to see those competitive bids.
Yeah, no, and I hear rumors that Rio Tinto might be sniffing around that deal as well, just because of the size of the Timok property in Serbia there. So there might be some
True.
interest from them.